Okay, so I'm going to be backtesting ICT's 2024 mentorship. All the information he's provided so far, I've managed to put down these steps to form a model. So yeah, let's get into it. So first step is determining the bias, and I'm going to be doing that like he did by using new week opening gaps and new day opening gaps. And after 7 o'clock, I want to identify equal highs and lows, and I'm waiting for a raid to happen opposing my bias. So if I'm bullish, I want to raid sell side liquidity and target a 1 to 3. The entry model that I'm going to be using is my own personal model, where I wait for a shift in market structure, a raid of a swing low, and a close beyond a swing point, which you'll see as we move along in this video. I'm then waiting for an optimal trade entry plus an overlapping array to target a 1 to 3. I'll be beginning my backtesting session from Tuesday the 6th of August because I can only get so many new day, new week opening gaps on the 1 minute time frame using the indicator that I'm using with the TradingView subscription that I've got. This is the first video I've ever made, so if I am a bit slow or I fumble here or there, just bear with me, but I promise you I have quite a depth of knowledge, and I hope this will be of assistance to anyone who is watching. Okay, so let's just move along the chart a little bit. First things first, got new week opening gap here. We've got 1, 2, 3. Is there one more? Yeah. So we've got 1, 2, 3, 4 new day opening gaps. This is a new week opening gap, but we've got 4 of them above price right now. So maybe we might use this to push up into those. Let's see where we form equal lows. So I can see we've already got equal lows here. Okay, we've pierced through them. And we've got our market structure shift here. So I know a lot of people would classify a market structure shift as a break of the high that broke the low. But personally, I just like to use like any swing high that's been created, and if the candle's body closes above it, I personally like use that. And then once that's happened, I'm waiting for a swing low to get raided. And after we've raided a swing low, I want to see a body close above swing high. But one thing that I will not do is, if we do have this raid of a swing low, if we've left equal lows within the range, or even equal lows with this or with this or with this or whatever, I will not classify that as a raid. I'd want to see those get taken out as well, and then look for my entry. And many times it will leave equal lows there and then start to run off, and I'll miss the move, but I'm okay with that. Okay. So now, as you can see, we've got a raid here, and we've closed above this swing high, but I do not like the way we've left equal lows here, so I'm not going to be entertaining this trade idea. Okay, so now I'm going to move this line over here. Bless myself. I've got the sniffles as well, so apologies if that annoys anyone. Okay, so we rated these equal lows here, and we now have a shift in structure. So now I'm waiting to see a swing low get rated, and as you can see, we rated this and we have also rated this. So I'm going to annotate that on my chart. Now I'm waiting to see price close above swing high. Not a fan of this consolidation, to be honest. Okay, we've closed above this swing high, but because we've left all of this here, I'm not interested. Okay. Yep, equal lows. I'm not interested in that. Okay, so now I'm gonna move this along here. And as of right now, the past 5 new day opening gaps are all above price. And we do have these failure swings here that might want to get targeted after 7 a.m. But if we go before 7 a.m, we've got these here, we've got these over here, we've got these ones over here, we've got these two, and I believe if we zoom out, we've also got these. So there's quite a lot of equal highs resting above price right now. A little accumulation, manipulation, distribution. Okay, so we've got market structure shift here. Now we're waiting to see a raid of a swing low. Okay, as you can see, the bodies of the candles have not closed above the swing high. And to be honest, I don't like this. And the reason is because I want to see higher lows. And I want to see one of the higher lows get rated. So I wouldn't classify this as a higher low because it didn't create a new higher high. So personally, this would not be a raid in my opinion. I mean, it could pan out, but I'd personally want to see a higher low that created a new impulse get taken out. Okay, so do you see this high low here? That created a little impulse swing. Why did I switch that off? Okay, let's put this. So I'm gonna hold this as a raid. And now I want to see a close above a swing high. So you can see here, got a close above a swing high. Let's just put that on the top to make it less cluttered and more easy on the eye. And now I'm waiting for an optimal trade entry. So when I do this, I'll usually draw it with the wicks and with the bodies. And I'll look for any overlapping arrays. Let me just delete this for a sec. Okay, so we're starting to retrace. I mean, some people would have seen this inversion fair value gap and could have entered in this candle. No harm in doing that, but this is just my personal approach. And now if I slap the fib from low to high, and then if we also take it with bodies, what arrays do we have at OTE? So obviously we've got the inversion fair value gap, we've got a breaker here as well, and we've got an FVG here. So I'm looking for an area where all of them overlap So that's the inversion fair value gap. That is the breaker. And this is the fair value gap. So that's the darkest area that I've got here. That one there taps OTE and also taps into the darkest area of those overlapping arrays. You could even just take the first array, which is this one here, and okay, so just to be simple, I'm gonna put the entry at the highest point of OTE, stop under the low plus a couple ticks, targeting this new week opening gap and these fib extensions here, plus the equal highs on the left. Let's just go into a higher time frame so we don't have to sit through this for too long.